The Department of Justice is expected to release a report tomorrow detailing possible actions by the U.S. concerning criminal use of cryptocurrency. This comes amid increasing warnings about a crypto winter that's coming. Joining us to discuss regulation and the current state of the crypto market is Morrison Foerster partner Brian Kidd, along with our very own David Hollerith. Brian, it's good to talk to you today. This comes at a time where we've seen hacks at crypto exchanges. We've seen stolen or plagiarized tokens as well. Certainly a lot of cracks in the system. And I wonder what you think this says about how regulators should be approaching this issue.
Well, thank you very much for having me. There's obviously a lot going on in the market right now. And I think you're seeing the way that regulation has played out over time is we're really seeing a decentralized regulation of the crypto market. So when you've got the different regulators fighting for their piece of the crypto pie, and you've got DOJ is very active in the space, SEC very active in the space, and the CFTC very active in the space. And you've seen some, rumblings from Congress as well, and some proposed stablecoin legislation that's currently in the pipeline. So there is a lot of focus in this space, but it's not kind of moving in the same direction at this time. And I think that's where you're seeing the cracks, and you can see things slip through without that focused regulation.
Hey, Brian. It seems to me that given all these different pieces of regulation, the DOJ has been fairly successful at moving forward with sort of their own sort of enforcement actions. And I was sort of curious how much you think adding more clarity would help them accomplish their job. I mean, as far back as, I think February of this year, it's been pretty clear that they're moving forward. They have a task force that's specifically geared towards cryptocurrency, and they're clearly, rolling out indictments as we speak. So sort of curious how you think they fit into maybe clarity of regulation altogether.
I think having clear regulation generally is good for everybody. Here, obviously, the Department of Justice has taken a very active role. They, in February, I think, as you referenced, they appointed the first director of their national cryptocurrency enforcement team, which I think is a key part of the Department of Justice's focus at this point. And while I think, additional regulation or clearer regulations would be beneficial, it's not going to stop the Department of Justice from, continue to investigate and prosecute individuals and companies that they perceive to be, bad actors or committing fraud in the market. And I think you've seen that with the enforcement team, but also there's now a dedicated FBI team, the Virtual Asset Exploitation Unit. The department's continuing to put resources into this space, and I would expect that will continue to expand as cryptocurrency continues to play a bigger role in our economy.
Brian, it's Brian Chung here. Now, I just want to highlight that you were formerly the chief of the Market Integrity and Major Frauds Unit of the DOJ. When you look at something like the DOJ's announcement last week about insider trading happening in the NFT space with a former employee at OpenSea, one of these big marketplaces for those non-fungible tokens, what stuck out to you in terms of the DOJ's decision to characterize that as insider trading? Because that could have implications for perhaps the treatment of it as a security, right? So it's a very interesting type of dynamic that we saw in that announcement last week.
It was indeed. And I think this is, in the NFT space, this is kind of one of the first big moves. And using insider trading, it's using a traditional securities enforcement law to go after, the NFT marketplace, which it's interesting and it's unique. And we'll have to see how it plays out because, obviously for insider trading, you're going to need that securities angle, which is why I think they've characterized it that way in the indictment.
Yeah, just to follow up on that too, if we're thinking about the OpenSea sort of indictment, I spoke with a lawyer about that, a former district attorney about it, and he had sort of brought up the fact that the DOJ is obviously quite busy. And then in this scenario where cryptocurrency or crypto assets in general aren't necessarily securities, some of them are, it's a little bit unclear, but the DOJ was sort of able to come in with wire fraud, money laundering, and sort of skate around having to distinguish what a crypto asset is. But I'm curious, do you think adding that clarity will help sort of the agencies work together, or do you think it's sort of irrelevant to the DOJ's mission of enforcement right now?
I wouldn't say it's irrelevant, but the DOJ is going to continue to enforce its traditional laws, which is obviously wire fraud, money laundering, those types of statutes. They're going to continue to enforce those wherever they see that they fit. But I do think, having clear regulations will allow, not that the SEC, DOJ, and CFTC do not work together well. I think they do, and you see that played out time and time again. But I think it will help them continue to move in parallel as they, look at these markets and look at the crypto assets and NFTs and decide, who and what conduct is running afoul of the established laws. And but by and large, I think DOJ is going to continue to do what they do, regardless of whether there are clearer guidelines put in place. I think they're going to continue to investigate and prosecute individuals that they believe run afoul of the current laws, which wire fraud, money laundering, those types of things.
A space to watch for sure. Brian Kidd, Morrison, Foerster partner, as well as Yahoo Finance's David Hollerith. Thanks so much for the conversation.